What's going on? I'm Marcus, you're the channel The Debt Free Dad. In today's video, we are going to talk about something that's important, something that's y'all already know that I think is important because anybody who been following my channel, or if you haven't been following my channel, I started my whole financial freedom, first generation millionaire journey because I literally had an aneurysm on my wife's birthday. And I thought while I was sitting in the ICU, I tell everybody this story. The whole time I was sitting in ICU, I didn't think of, life or death or the upcoming surgeries or none of that stuff. None of that stuff crossed my mind. Literally, the only thing that crossed my mind, I was just sitting there saying, okay, I got this policy, so I'm good. I got this much in the bank. I was sitting there just doing math, calculating numbers, making sure that, okay, yeah, all right, I feel comfortable that if something happened, everything will be taken care of. So the life insurance game is a serious topic. I wanted to bring somebody on who is a subject matter expert in the area. So today we're going to be joined by my homegirl, Tasha Triplett. You can check her out on IG at Tasha Triplett _ 1P, 2T's. Don't get it jacked up. I'm going to make sure I put it across the bottom of the screen. But she's our subject matter expert today. She's going to give us some insight because I'm going to be honest, your boy wrote down some questions on a sheet of paper. Y'all know I really don't write down questions, especially on paper. Your boy wrote down some questions because I got some things I need to know the answer to. She going to give us some free game on this Free Game Friday. So let's go ahead, bring her in so she can introduce herself. What's going on? How are you doing today?
Hey, Marcus. I'm doing great. I'm just so happy to be able to talk to you today and to talk to everybody that's out there. So, yes, thank you so much for inviting me on.
Thank you for, being blessing us with your knowledge and skill set and expertise. And isn't this, don't tell me, this is Life Insurance Awareness Month or something like that? So, yeah,
Yes, it
I know when you mentioned that to me, I was like, hell yeah, perfect time. And this is Life Insurance Awareness Month. So, this is a great time to do this topic. So, why don't you go ahead and introduce yourself to the people out there viewing?
All right. So, my name is Natasha Triplett. I am a licensed financial coach. I am licensed to be able to speak about life insurance. So, you always got to drop your credentials out there. I am originally from Memphis, Tennessee. I currently, well, I've traveled the world. So I lived in Knoxville. I went to the University of Tennessee, Knoxville. I started as a teacher there. I moved to Beijing, China, and I was a teacher and an instructional coach there. Then I moved to Houston, Texas, and became a school principal. And during my transitional time, I actually started to pursue financial literacy because I realized that honestly, we don't talk about money enough in the schools. And so it actually started with my grandmother. My grandmother had mutual funds that she put in place for my sister and I when we were younger. And honestly, just like you mentioned, with you had your life insurance, you had different things in place, but you really didn't know what you had. And that was my sister and I. We really didn't know what we had.
Right.
And so it took for my grandmother to get sick. She couldn't talk. She had a stroke. So literally everything that we thought we had in place, we couldn't communicate with her. And so we were contacted by this company, and they're like, "Hey, contact us. Let us know if we can talk to you." And just like the typical, honestly, African American family, we thought that they wanted money from us.
Right.
And
Right.
so we finally, after my grandma passed away, we finally contacted the company, found out that we had those mutual funds in place and life insurance and all these things in place. And so my brother-in-law, my sister got licensed in the industry first, and then they ended up getting me licensed. But honestly, Marcus, when they first talked to me about getting licensed, I told them no because I was pursuing my education dream.
Right,
and I had worked my way up the educational ladder. And so it actually took for 5 of my teachers to get laid off my first year of being a school principal. And finally, I said, hold on, wait a minute. I need a backup plan. Teach me the game, teach me the money game, help me get my licenses. And fast forward, this is the best decision that I could have made from a standpoint of business wise, helping people. And so I'm truly passionate about that. And so, yeah, that's just a little bit about me.
Okay, yeah, that's definitely dope, and it's cool that you got that financial planning background and what as well because it all plays in. And so I think the best way to start this conversation because disclaimer: licensed attorney, not legal advice, not financial advice, just my opinion and takes. I always got to get that disclaimer to keep the ball folks happy. But I started digging in and doing a lot of research, and I can speak from experience. I recently, about 4 months ago, my brother passed away. And, one of the realest moments for me was when I was getting all of his belongings and items. And I honestly thought to myself, like, damn, this is a cold comment, but damn, your mark is left to what you have, your physical possessions, because he didn't have a policy in place for himself, and it is what it is. But that's something that we see a lot. We see it all the time, the dreaded someone pass away in a GoFundMe account. So let's talk about first, I think everybody, as a matter of course, kind of understands that they need life insurance, but what are some of the things, in your opinion, that you think that make people hesitant to do it, to either jump out there and get it in the first place?
Yeah, Marcus. And so my condolences to you and your family with your brother, and of course, not necessarily having the things in place. And so most of the time, people don't want life insurance because they feel like it's just another bill that they're paying. And so I always coach my clients on the importance of having life insurance. And I tell them that it's not just another bill. Oftentimes I ask these main questions. Do you have insurance on your car? And everybody says, yes, because I got to have it, just in case I have a car accident, I got to have insurance.
Right.
Okay. Do you have insurance on your phone? Well, yeah, because the iPhone is expensive and I don't want to pay all that on the iPhone. Okay. Do you have insurance on your house? Well, yes. I mean, if you're in Houston, Texas, you got to have insurance on your house with the flooding and hurricanes and everything that we have. And so I asked the same question about, if you think that your house, your car, your phone is important, why don't you think your life is important? Right. We get insurance on these tangible things like a car, a house, and a phone because in the event that something might happen. But we know that we all have a born date, and we also know that we have a death date. We just don't know what the date is. And so it's super important to make sure that people to understand that it's not just a bill. Also, people think that life insurance is expensive before they even get a quote. Right. And so life insurance is really based on your age and your health. And so I'm able to offer my clients some quite affordable rates based on where they are, but it does depend on the person. And so I always say, you never know unless you try. And so those are some common myths that people have. And so I really try to help people to understand the importance of those things because they are uncomfortable when it comes to life insurance. It makes them scared when it comes to it. But it's super important to make sure that we plan so that if something happens, like when my grandma passed away and when your brother passed away, we're not scrambling trying to figure out, okay, what are we going to do? Or where is the policy?
Right. That's a big deal. I literally, after that, I had to have a conversation with my mother, like, you got so much stuff in this house. I literally had no clue. I was like, at least my father, I know exactly where to go in his house with all his important documents and everything, policies and everything is. So that's definitely true. And I tell you, I took a look. It's funny. I was just looking at this comment. Shout out to Aaron. Thanks for tuning in. Many people. Yeah, I think that is true. That is true. And I remember when I got my policy signed, I called my father and said, if I mysteriously fall down the stairs, y'all look at my wife. That's what I said. But, I looked at the statistics because, and this is a fact that I would have never guessed this fact. You probably know this fact because you're in the game, but African Americans are actually insured at a very high rate, a rate that's actually slightly higher than white Americans. I couldn't believe that. So I was like, because at first I thought, like, man, maybe it's because I always see a GoFundMe always popping up on my timeline or something. So when I saw that statistic, first and foremost, I was shocked. But then when I dove deeper, it's not the fact that African Americans don't have life insurance. The issue is almost 50% of them are underinsured, according to statistics. So when we talk about being underinsured, like, just in general, and I know a lot of people throw out 10 times, 3 times. What in general, if someone is getting something basic to cover, a family of 4, your typical 2 kids, half a dog, white picket fence, what would that typical amount be when you're talking about for a loss of someone who's actually providing income or provider to the household? What's the recommendation there?
Well, first, I got to say, you're right. there is a big chunk of people who have insurance, but the thing is they either might not have the right type or they might not necessarily have enough.
Right.
And so one thing is most times people just depend on insurance on their job. And so typically I tell people when you only have life insurance on the job, you want to seek insurance that's actually that you own, that belongs to you outside of the job, because we know that the jobs might change.
Right.
And so what that amount actually looks like is I use a key little I would say a key little solution when it comes to identifying how much life insurance you need. I call it a dime. So number one, enough to pay off all of your debts that you might have, because your debts do not die with you.
Right.
Again, people, your debts don't die with you. A lot of times people say, I'm going to let the debts be buried with me. No. You got to pay off those debts, or it's going to be left to your next of kin.
Right.
Number two, enough life insurance coverage that will be at least 5 to 10 times your annual salary for your income sake. If there's anybody that's dependent on your income, your children, your spouse, if you're sharing household bills with anyone, you want to make sure that you have enough coverage that's going to cover that income. Then the M is for mortgage. So if you live in a house, you want to make sure that you have enough coverage to cover the cost of that mortgage if something were to happen to you. And then the E is for education. Right. So enough life insurance coverage that will cover the cost of your children's education. We want all of our children or future children to get scholarships. Right. But we know that sometimes people aren't fortunate enough to get scholarships. So you want to at least have some things in place to cover the kids' education. So once you have your debt, your income, your mortgage, and the education covered, then you should have a good amount of life insurance coverage for you and your family.
Okay. And it's funny because you spun that off. I was like, man, she answered the question before I got to my point, but that's dope. I rock with you for that. I thought the point, and I had that as a point here, a lot of people have life insurance through their job. And again, if you're familiar with my channel, I got a video out there somewhere about the time I got fired. And, I kind of knew it was coming, but I didn't expect it to be coming. And I'm talking about from starting at this organization, being the youngest, only minority attorney there, to actually leading the entire agency, having a bunch of FTEs and agents and investigators and auditors and everything in front of me. I mean, 6-7 years, and one day I went in, it was like, oh, it's one of those things. It's political. It's at will. You serve at the pleasure of some political appointee. So, fortunately for me, I had a policy outside of that job as well. So I was in that position to be, I was good. But think about it. If your life insurance policy is tied to your job, and we just came through a pandemic and you lost your job, Lord forbid you lose your job, an illness happened during this time, it could put you in a really tough position. So I thought that was a great point. So I'm going to start with, I think, the one that people probably have the most familiarity with, and that's term life insurance, okay? So I think that one is kind of the one that people get branded on, and most folks have some understanding about. So, all right, let me explain exactly what is term life insurance. And the other question to that is it true that some companies won't deny you for insurance policy in general, or that they won't ask health history questions to actually qualify for a policy? Because I did see some discussions going back and forth about if I have these pre-existing things and will I get denied? So those are defined term life insurance, and is it guaranteed? Do pre-existing conditions, can they just say, nah, we're not going to rock with you because of X, Y, and Z, or what?
Okay, so those are actually two separate questions.
Right.
So I'm going to break it down a little bit. So let's just start with the pre-existing conditions. So life insurance is based on your age and health, just like I mentioned before. Right. And really, it depends on the underwriters in any life insurance company. So when you do your life insurance application, they will definitely do some medical background checks to kind of see where you are. If you have a terminal illness, in some events, you might not necessarily get approved. But it also depends on how long you've had the illness. So it all depends. It's a case-by-case basis. Now, just because you have a terminal illness or some sort of something on your medical background, don't let that deter you away from applying for life insurance. I tell my clients all the time, let's just see what happens. Let's just see what happens. Okay, yes, the worst thing that can happen is you not get approved, but it could be that they approve you and it might just be a little bit higher. I'm gonna tell you a little story about myself. So I was 27 years old and I was living in Beijing, China, and I felt like I was in the best health of my life. And so I was actually working on a dance with my friend because we were working on this dance for church. And literally the next day I woke up and my whole right leg was on fire. Like my foot, ankle, leg, everything was on fire. And so prior to that, my brother-in-law and my sister had been talking to me about getting life insurance. And I thought that I had life insurance, but apparently what I had was just not good, honestly. And so they were like, Tasha, we need to change your life insurance. I need to help you do this. And I'm like, okay, I'm good. When I come back to America in May, mind you, this is around February, March when this happened. So I'm like, when I get home in May, I'm going to get my life insurance and everything. So March, I'm working on this dance. I wake up, I have this pain in my leg, and I'm like, oh man, I must have sprained my ankle. So I literally go to about 5 different doctors, from Asian doctors to westernized doctors that were in Beijing, China. And literally everybody was telling me that I had an ankle sprain. So they did these injections on my ankle. They gave me this medicine. Nothing worked. I went from being limping around. I was on some crutches. I was in a wheelchair. I was in a boot. It was just a terrible experience. But they told me that I had a sprained ankle. So I flew to America that May, 15 hours on an airplane just to get there for my cousin's graduation. I go to the graduation on Saturday. Tuesday, I'm in the doctor's office in Memphis. And I'm like, hey, I need y'all to check me out because I'm in a lot of pain. The doctor does an x-ray and say, we don't see a sprain, but your right leg is substantially larger than your left leg. Miss Triplett, I think that you have a blood clot.
I knew exactly what it was because I tell you, and I'm sorry to cut you off, but I went to the gym. I saw one of my homegirls in there, and she was like, oh, I'm showing her some exercises, and we over there doing cardio. And for 2-3 days, a week later, she was complaining about her leg. She was like, man, you really went hard. And she ended up having a blood clot. That's the only reason when you said it, somebody told me a similar story. So go ahead. Sorry, go ahead.
Yeah, no, it's fine. More people pass away from blood clots than we actually realize because people don't necessarily know what it is. Right. So I get the ultrasound done on my leg, and lo and behold, I have a blood clot. And the first thing the doctor tells me is, you're lucky to be alive because you traveled 15 hours on this flight. That blood clot could have gone straight to your heart, to your lungs, and killed you instantly in midair while you were on the airplane.
Right.
Well, the first thing I thought was, oh my gosh, I thought that I was perfectly healthy. But the second thing was, I don't have life insurance for real. Right. So I go to my brother-in-law and I'm like, hey, Melvin, you got to put me in this plan. You got to help me out. And as soon as he tried to, I got declined. I got declined because my health was no longer what I thought it was.
Right.
And so I ended up having to wait for about 6 months, and they finally approved me, but they approved me at a higher rating. Because I was better, but it was based on my history. So I tell you guys that story because you just never know, right? You want to make sure while you're young and healthy, there's no age cap, guys. While you're young and healthy, you do want to make sure that you get life insurance in place. So that's the first thing when it comes to the pre-existing conditions and all of that. I wish that I would have listened so that my life insurance would be a little bit cheaper. But hey, I'm just thankful to actually have it now. Now to go to your next question, when it comes to term insurance. So term insurance is a type of insurance where it is actually a tool where you're able to get more coverage for a lesser amount of money, but it is set on a certain term. So depending on the company, you could be covered for 35 years, 30 years, 25 years, 20, 15, 10 years. It just depends on what the company offers. So every company is different when it comes to that. But people like term because they feel like, man, if I'm going to pay X amount of dollars, I might as well get the most coverage that I can get at a cheaper amount. And so that's how term works. And then in a lot of cases, you're able to renew the term for another term. And so again, depending on the company, you might be able to renew the term without having to do a health checkup at the renewal, but it might be based on your next age. And for some companies, though, when you renew the term, you might have to go through a medical check. So it all depends on what the company is actually offering for that particular term policy.
Okay, that makes sense. And I was just checking out this comment. Hey, check out the description. Her link tree is in the description box to this video, so you can go in there. This sister can definitely get you squared away if you want to search and get some things like that. So I wanted to give that. Hey, I wanted to give that shout out and info out there. So the next question. Oh, no problem. The next question I have is a few more questions, just kind of in this area. Do people, or do I need a policy for my minor child? A lot of times insurance is based off, hey, let's get it to supplement income in the event that something happens. So I've heard some sides say, get a policy for your child. Sometimes they have, I think, riders or something like that for a certain amount. I've heard some people say, those kids don't make no income. Don't worry about it. So what are your thoughts on the policy for a minor child?
Yes. Honestly, Marcus, I feel like you need to put coverage on your children. With the world that we live in, from no matter what city anybody is tuning in from or what state, we see crime every single day. We see accidents every single day. I was just watching something on social media where this little child and her father, it was two kids and their father, and they're crossing the street, and this car runs the pedestrian sign. They're in California. He runs the pedestrian sign and literally was this close from killing the child. And so when it comes to accidents and health and things like that, you just want to make sure that you cover your children, because we just never know. And then if the pandemic didn't teach us anything, it also taught us that there's no age to death. Before that, I think everybody just kind of thought, oh, when you get older and all that. No, there's no age to it. So we want to make sure that the entire family is covered. The great thing is there are products out there that has riders that covers all children under one rider. Now, there are some products where they charge each child differently. But there are some products that actually covers all children under one rider. And so that is just a smart thing to do, even though you might feel like, oh, they're not paying any bills. At the end of the day, you still have to pay for their funeral costs if something happens. So you just want to have just some coverage in place so that it does cover that in the event that something happens. And then when that child becomes an adult, of course, still living, then they can convert that policy over to an adult policy, and then they'll be fine.
Right. Okay. And I think that's smart. I know we got something like that where it's a rider for a set amount per child up into X age, and then we can convert it into. So yeah, I know we have something similar to a rider policy. Okay. Now let me ask. The next question is, I saw this comment up here. I feel the same way. I'm glad I got my good policy that's indicative of what I needed to be to take care of everything before my knees start hurting. So I was lucky. I was lucky in that regard. And it's interesting because like my wife and I essentially kind of have a similar policy value, but because at the time when she took her physical, her blood pressure was higher and mine was great. Hers is like maybe $30 or $40 more because of just that slight elevation, And it was good because they did give her an opportunity. They was like, hey, you know what? We'll come back out, take your blood pressure again next week or a couple of weeks to give her opportunity to get it together. But that's definitely true. Get it whenever you can get it. But it's always a plus. I think the younger you are, the better health you typically are going to be in. So the next question I have for you is, in this space where we talk about finances and everybody looking for financial freedom, and we on pace to become first generation millionaires, you hear a lot of proponents like I'm just to name one, and I'm a Financial Peace University graduate. I had to get an old white guy, Uncle Dave, to convince my wife that we could pay off student loans because she didn't think we could do it with my explanation. But a lot of times you hear, well, you can get to a point in your life where you're self-insured. You have enough assets, you have enough money in the bank to where if something happens, those assets are there to take care of the funeral costs, to take care of other expenses. Do you find that a lot of people like get to a point where like, okay, I'm financially stable, I've reached a couple of M's in my bank account or something, I no longer need insurance? Or do you find the alternative? Most people kind of keep it as a mechanism to add to the wealth of the family and generational wealth. Which do you see more in your practice?
So I see a combination of both. So when it comes to life insurance and the importance of it, I talk about the fact of it's income replacement. So you do want to have enough life insurance in place if something were to happen to you, and you're able to pass that down for your family from a generational wealth standpoint. But I tell my clients about the importance of keeping their life insurance and their investments separate. Mm-hmm. So as you have your life insurance in place, you're investing at the same time. And so you may get to a point where your investments have trumped the amount of life insurance coverage that you have, meaning you've all of your debts are paid off. Everything, when we talked about that dime, the debts are paid off. You're replacing your income, your mortgage is paid off, your children's education is paid off, because now the children are older. You might not necessarily need the amount of coverage that you once started with. Life insurance, a lot of life insurance is really needed when in the earlier years, when your children are younger, when you have a lot of debts, before you even get to retirement age. But the older you get, the older your children get, then your need for a bunch of life insurance actually goes down. Now, then that money becomes that generational wealth that you pass down if you've actually done what you're supposed to be doing all at the same time. So it's kind of like a twofold thing. If you follow the program or the process of, okay, I'm going to make sure that I save enough money in my emergency fund, I'm paying off my debts, I'm investing money, and I have my life insurance in place. If you're doing all those things consistently, then you could get to a point where you're actually self-insured and you no longer need it. But if you're not necessarily doing these things, then you definitely will need the life insurance in place so that it can target those areas if something were to happen to you.
Right. And I think, I know me personally, a life insurance policy outside of my employment is just going to be something that I maintain. I remember, Dave Ramsey talking about being self-insured, but I watched one of his videos where he was like, yeah, we're self-insured, but my wife won't let me not have a life insurance policy. And I think that's a good rule of thumb. You know what I mean? If you've paid off everything, you only got a mortgage, everything else is, debt-free, just your general living expenses, that money you're paying to a policy is going to be a much bigger cost. Plus, it gives me a little bit of flexibility where I know if something happened to me, that stash is there for the next generation. Me and my wife could live a little bit better in retirement, knowing that that's over there. Like, well, I got an insurance policy. This is for me and her.
Yes.
So that's kind of my approach. All right. So the next thing I want to do is I want to talk about whole life insurance, right? Because whole life insurance, and I'm going to tell y'all who started this. I blame it all on Waka Flocka Flame and the Earn Your Leisure guys, because you see all of these videos about being your own bank and borrowing from yourself. I lie to you not. Let me play this clip real quick. It's a couple of minutes. Let me play this clip. Then I'm going to tell you how many people came to talk to me about this clip, because, it is what it is. Some of my people around the way, they look at me as the go-to guy. And I was like, I don't know what the hell he's talking about. Let me play the clip, then I'm going to jump back into it. All right, so that clip right there gave me a lot of headaches, because I tell you, a lot of the homies from around the way, after they saw that clip, they was like, man, what did this dude talk about? I had so many. I had goons and everybody I know asking me, I'm trying to open up an insurance policy and be like Walker. So I want to talk a little bit about whole life insurance. I don't know if is this what they refer to as like infinite banking or something like that? I've seen a phrase like that thrown out there. So what is whole life insurance and the distinction between whole life insurance and term life insurance first?
Okay, so I'm so glad that you played that clip. You know, that clip has been circling around TikTok, Instagram, Facebook, through the text messages. Just like you said, everybody was hitting you up. Everybody was hitting me up like, what is this? I had clients hitting me up, and I'm like, okay, hold on. We gotta talk about this. Because it's a lot of, honestly, a lot of misinformation that was actually taken from the clip. And so before I even address the clip, I do want to talk about whole life insurance.
Right.
So typically with a whole life insurance policy or a cash value policy, that's when companies actually bundle the life insurance and the investments together. So they say, you have a cash value, you're paying into this policy every single month, you're accumulating this money in your cash value, and then you're able to borrow from this money. So then people feel like, oh my goodness, I'm my own bank because I can borrow from the money. But the main thing is, what people don't realize is you can only borrow from the cash that's accumulated in what you put in.
Right.
Not the face amount.
Right.
So even if you're paying on let's say you have, let's say $500,000 in a whole life policy, which would be pretty expensive, but let's say you had it, people feel like, oh man, I can borrow from that $500,000. Nah, that's not how that works.
You only put in 15,000 worth of payments.
If that.
Right.
Yeah, so you can only borrow from what you put in. But the crazy thing is, when you're thinking about borrowing money and being your own bank, is you have to think about the actual bank. When we have the basic savings account in a bank, typically that's accumulating maybe at less than 1%. Right. But if you borrow a personal loan and you have to pay it back, you normally have to pay them back anywhere between, let's say, 9 to 12% when you're paying back a personal loan.
Right.
That's the way you have to think about when you're borrowing from your life insurance policy. Mm-hmm. You're not just borrowing this money and paying it back interest free. No, you're borrowing this money and then you have to pay it back with more interest than what you actually took out of it. You're paying back more interest than the amount that you actually borrowed. So you're actually losing. So when it talks about being your own bank, how can you be your own bank when you paying somebody else back more than what you took out of it? So that's the main thing that I tell people. Let's stop talking about being our own bank when it comes to that. And then another thing is, when it comes to whole life policies, they are a little bit more expensive, I would say, because of the fact that you're paying this set amount for your whole life.
Right.
But honestly, when it comes to whole life, it has an end date too. So just like a term policy has a cutoff date, a whole life policy also have cutoff dates as well. Okay. And so a lot of times people don't necessarily think about that. But yeah, whether if it's the year of 95 or 100 or 105 or whatever the cutoff date is, there's still a cutoff date. So if a person lives, they're either going to live too long or they're going to die too soon. If they die too soon, the person will only get whatever the face amount is of the policy. If they live too long, then the person is only going to get what's accumulated in the cash value. So I'll give you an example of that, Marcus. Let's say you have, let's say $100,000 worth of a whole life policy, and you're supposed to, let's say it ends at 95, and you pass away at 80. Okay. Let's say over the course of the time, you've accumulated $80,000 worth of cash value in that policy, right? So some people might think, okay, is my family going to get the 100,000 and the 80,000? No way. They're only going to get what the face amount is. Right. Okay. In most cases, which is that 100,000. Right. So Tasha, where's the 80,000 going to go? Back into life insurance land, wherever that is.
Right.
Okay.
Right.
But let's say a person, if the end date is 95 and they actually, let's say they live to 96. Okay. Well, over the course of that time span, if they reached that age, then they would have paid that amount of the face amount. So that cash value is going to be equal to the actual face amount. So the family might get $100,000, but they've also been paying on a life insurance policy. So they're only going to get whatever that cash value was.
Right.
So in most cases, there's never a time for you to get both the face amount and the cash that's accumulated in the policy when it comes to a whole life policy.
Okay, so let me ask if let's say person A, oh man, this sounds like a damn law school question, but let's say person A opened up a whole life insurance policy for $100,000, right? And they were like, you know what, I'm gonna throw 50 down on it up front. Let's say during the course of their life, and this policy expires at, let's say, year 100, but this person is 56, doing pretty well. They paid off the entire. If it's $100,000 policy, they contributed all the way up. They was like, we want to speedball it until we get the $100,000 in there. Once they actually reach that value of the policy, they continue making payments, or at that point they would no longer continue making payments.
So my question to person A would be, why would you put that all in a life insurance policy when you could have just invested that $50,000 and had your life insurance at the same time? Right. Because when it comes down to it, it's still the same. The amount of money that you've accumulated in the cash and the amount that you're paying on the life insurance policy is still combined. It's not a separate entity.
Right.
So when you think about that type of policy, the person only gets one. They only get one when it comes to it. So in that particular example, if a person had that much money to put into it, we'll be talking about other options of what they can actually do with their money so that it can make sense for them to have that type of policy.
Okay, and I bring that example up because, you know, I told you, I mean, I'm going to keep it a buck with y'all. I let y'all know what we got going on. You know, I've sat down with my mother, and I remember she came out with, I don't know if you ever seen those 1972 accordion style things where you open them up. She opened that up, and I just put my hand on my head and was like, oh shit, because I knew it was just going to be a mess. And, you know, Lord bless her, like sometimes people who don't have the information, they don't know what's best, so they do a little bit of everything. Yep. So she did a little bit of everything. I was like, this is a term policy here, this is a whole policy here, and I'm looking at the cash value, and in my head, I'm like, you could have got a better return putting this money somewhere else if you got a term policy here. And so, you know, that was why I asked that question, because I think a lot of times some people who may not have the education or they don't, it wasn't explained to them, or they didn't get that knowledge. They know that they have to do something, but they're not sure about the process, the steps, which situation works best. So in that example, she just did a little bit of everything. And doing a little bit of everything is better than doing nothing. I'll tell you.
You are right.
Doing a little bit of everything. Yeah, it could have been more strategic, but doing a little bit of everything blindly is better than doing absolutely nothing. But I think that's one of the things where we have to really identify. And that kind of flips to the next question. In what situation would a person be more, I mean, personally, my view, and not being a professional in this area, I typically think most people stick with something term. Most people, if you want to do something, stick with something term. It'll be easier on your budget. But what situation would be, well, if you're I've seen it, and this is just from open source research, if you're a little bit more affluent, if you have more assets, you may want to consider whole versus this. What is the distinction point for you on whether a person should do term or whole? And I know there's a bunch of factors, so we can just give something in general, because everybody's situation is different. You know what I mean?
Yes. Okay. And so let me start by saying these are my views and my views only. So, you know, if there's anybody in the chat, but no, honestly, I'm going to speak to you like I would speak to my clients. You know, the great thing about being a licensed financial coach is, yes, I'm licensed to sell you life insurance. You know, I can help you get out of debt. I can help you prepare for retirement. I can help you save. I can help you do all these things. But at the end of the day, when it comes to looking at the clients, my goal is to do what's best for clients and to make sure that they're properly educated on the importance of the things, but also of what they actually need. So when it comes to, you mentioned term life insurance, I always tell people, I give two examples. You know, if you have $100,000 worth of coverage, whether if it's term or whole life, we know that the term policy is going to be cheaper. Mm-hmm. So I'm just giving like a random example. This is not a real quote, but let's just say you might be paying let's just say $40 for the term policy, but you might be paying $150 for the whole life policy, but it's the same $100,000 worth of coverage.
Right.
You might be on a 35-year term and you might have the whole life. But the question that I always ask people is, would you like to pay for that $100,000 policy on a discount or at the higher rate?
Right.
At the end of the day, it's still coming from the same life insurance land.
Right.
If something happens to you over the course of, let's just call it 35 years and the person doesn't renew their term. Okay, let's just stop there. If something happens to you over the course of 35 years where you pay $45 a month, you pay $45 a month. If something happens to you a month after you got it, you're covered.
Your ROI is great. Right.
Okay, but versus if you're paying $150 a month,
right?
How much money could you have saved or invested the difference over the course of that time span? Right. Now, people might say, "Well, a term policy, you gotta renew it." Okay, and even if you renewed it at the end of the 35 years, how much money did you actually save over the course of that 35 years?
Right.
So when it comes to the renewal, the money that you save can be added to that, and then you will still end up saving money on the back end. So that's the way I break it down for people, and I help them to understand, like, is term better for you? Is whole life better for you? Do you want it on a discount? Do you want to pay more? That's that one thing. When it comes to, that clip with Waka Flocka, and you mentioned, the affluent people and wealthy people and everything, that's where a lot of the misinformation comes from. Because at the end of the day, he mentioned this is what wealthy people do.
Right.
The key word is this is what wealthy people do.
You know something, sis, in that clip too, as many people asked me about it, it was like they missed the whole part when he said, I'm gonna take 2 or 3 million and put it in the life insurance policy. That he expressly says that.
He had the 2 to 3 million to take.
yeah. I was like, you gotta have something to take. But go to your point. Go ahead. When he says this is what wealthy people do, we all want better, so we immediately like, what are they doing and how are they doing it?
Yeah, teach me the game, Ghost. That's what everybody's been like. Okay, so let's break it down. So that's what wealthy people do. Okay, so there's a couple of things, when it comes to wealthy people, a lot of times they might use life insurance policies for estate planning or tax shelters and things like that. But that's after they've accumulated so much money. Right. But the main thing is normally what wealthy people do is, or what all people should be thinking about this before they think about, I'm going to put some money in this life insurance. You need to think about the key numbers of 26.5. Okay, 26.5. What that stands for is $26,500 a year. And so what that means is maxing out your IRA by putting in that $6,000 in it a year. Right. And then the max contribution to your retirement is $20,500. This is based on the 2022 calculations. So if you have not got your 26.5 in place between your IRA, maxing out your IRA and put into your retirement, you don't need to be thinking about I'm about to be my own bank, I'm about to do all these things. No, take advantage of the things that you actually can do. Right. If you actually took that money and invested that money there, then that money will be growing already. Then once you've done your part, because that's your part, then there's more, exotic investments and things like that you can do. And so that's where it comes to the wealthy people. After they've done that part, then they look into life insurance and they look into other things like that and venture capital and all those other things. But best believe they got their 26.5 in place. So if y'all don't take anything else away from this call, 26.5, $26,500 going towards your investments, your IRAs and retirements every single year.
Right. And I think that's a good point because, me, I know how to do options. I ran a few calls just, when I was learning it and researching it, but I'm telling y'all right now, and I don't know, I was at like 66, 67% there on my way to becoming a first generation millionaire. I don't even look at my net worth now because I don't want to look at my portfolio. That's why I don't know where I'm at right now. I was like, I'll wait. But But I said this on my channel a lot of times. I'm content. In 2020, there were more 401k millionaires created than like the previous 5 years. That's how I'm going to get there. I'm not going to get there by doing anything fancy, by doing anything risky. It's going to be through my 401k and through my IRA and the value of the property assets that I hold. That's it. Now, once I hit a certain magic number that I'm comfortable with, then I'm gonna be willing to look at, like you said, look at other options for investments and those things outside of that. So I think that was definitely a good gem that you provided. We had a question up here that I wanted to get to, and I wanted to see if you can give us some on that, because I couldn't give anything on it. I looked, I was like, I'm gonna hold that in the gun and shoot that out to her.
I got it. So I see that Nay R, she said, how is term paid out if you're still in the policy timeline? All right, Nay, that is a great question. And so I'm going to say that when it comes to, I'm going to speak to what I do for my clients and what I offer to my clients. If something happens to a client within that time span of the policy, if they did not lie on their medical background, or if everything checked out in their underwriting and something happens to them, the policy is going to be paid out in full.
Right.
So for example, my business partner had a client. They were actually a couple. They were in their 30s, and so he put $200,000 worth of coverage on his husband and wife. Well, this is back in the day before, after the pandemic, we're all fancy with our delivering of policies, e-delivery and everything to our clients. But this is back in the day when we actually had to go and hand deliver the policies. Well, the couple got approved. I think it was about like a week or two later, week and a half later, they got approved. So my business partner, he was on his way to deliver their policy. He was in Houston. He had to drive to Dallas. Well, that Saturday, I think he said he left on a Friday. That Saturday, the husband was coaching their son's softball game, young son, a softball game. Well, the husband passed out in the middle of the field, had a brain aneurysm, and died. He was perfectly healthy prior to that moment. He had that brain aneurysm and passed away. The family had only made one payment. And when everything checked out, that was not in his medical history, the wife got the full $200,000.
Nice.
And so, oftentimes people feel like, oh man, I haven't even paid that much into it. I'm not even going to get the amount of coverage. No, I always say, while you're young and you're healthy, get as much coverage as you can afford, because you never know, number one, when your health will change. You never know when you might be in a situation where you need to, if something happens to your spouse, you're going to have you don't want the financial burden. You're already going to have the emotional burden. So if you can get as much life insurance as possible, then if something happens to you or your spouse or your children, then you actually have something to take care of the things that comes after a person passes away.
Right. Dope. Good answer. She squared you away, sis. So, and that brings me to a next question. I got a few more questions here, and we'll address anything in the comments that come up. But the next question I have is, and I bring this up because I did a video. I don't know if you saw it, but it was I like to do videos that's like current events dealing with money, or if it's some crazy fraud scheme or something. So it's a story about a mayor who stole like $2 million from the school district. He committed suicide. Nobody knew why he committed suicide. Then it came out later that he was under investigation for stealing this money. And so it was interesting because, when I was doing my research for that case, he was clearly married. His husband, they had a life insurance policy. Now, payout of life insurance policies for individuals who commit suicide. Let me ask this because I found some interesting things just through open source research. I've seen some policies where they just like, it's expressly carved out. It's kind of like a implied slayer type of statute type of thing. If you kill somebody, you can't collect. So I've seen some policies, if it's a suicide, finito, you're not getting nothing. I've seen some policies that said after 3 years, we'll give it to you anyway. I think the most unique one I saw was a military policy. And I just had to do this research because, rest in peace, but it was somebody I knew who had PTSD and committed suicide. And their policy was, we'll pay it out so long as there's a documented record of some type of mental health treatment. So if you were going to a psychiatrist, psychologist, they had something on paper, 99.9% of the time, even if you went to them once, they'd be like, yeah, he had something going on. So what is the general landscape of that because unfortunately these things happen, right. Unfortunately these things happen, and this is things that people are going to have to deal with. What is the common one that falls, or is that something people should ask expressly about? Because I didn't think of it. I know I didn't ask because I'm just thinking like, ain't nobody I know going to do that. But you never know what people are dealing with, what their mental health may be from the time you know them till 10 years later down in the relationship. So talk a little bit about that. What's common? Should people ask about those type of things or whatnot?
Well, with the times that we live in, and mental health is something that is really serious. I was literally just talking to one of my good friends about this yesterday, about you just never know what people are going through. And so when it comes to suicide and things like that, it does depend on the actual company. Right. Some companies say if a person commits suicide after 2 or 3 years of having a policy, then they'll still pay out. Just like you said, some companies will just say, oh, no, we're not going to pay out at all. So that definitely depends on the actual company that you're insured with. But I definitely would ask. I've honestly had clients ask me the question about suicide, and it did kind of make me feel like, oh, I hope they're not thinking about this. But it was really just an in general question they wanted to know. Right. And so I think that, when it comes to life insurance in general, there are different riders and things that might be added to the policies, or things that you might want included. I just say ask questions, because when we know better, we do better. And then that way we don't have these policies where it's all this red tape and small print and things that we didn't know. And then we start looking and we say, oh, wait a minute, I've been paying for this for years and I didn't even know that this was included. And so I always tell clients, ask the questions. Mm-hmm. And half the times, if you don't ask me the question, I'm going to tell you up front, so that you can actually get the information that you need, so that you can really make the best decision for yourself and for your family.
Right. And I think that's a good point, because I know at the time and the age I was when I got my policy, this was literally my thing. And I was probably like maybe a couple years removed from being in the military, being in a war zone, being in Iraq. And it would have never came up, because I'm like, oh, we don't do that where I'm from. That was literally my thought at the time, was like, suicide, oh no, we don't do that where I'm from. Because like a lot of people who are from where I'm from, when things bother them with their mental health, with how they're feeling, they don't tell nobody. They don't talk about it. They hold it in. It develops into a real health problem. Then they go to a doctor for the high blood pressure, this or that. Yep. So it took a little bit of growth on my part to be like, damn, what would happen in the event if that happened? Hey, your boy don't plan on tapping out at all. But, it's just a thing that, like you say, for informational purposes, you never know what people are going through, how mental health may change, bipolar. It could be so many things that could change an individual and love from day A to day D. So that's something you definitely got to ask. All right, I do got another question here that I wanted to throw out. And I think you maybe touched on it before, or mentioned the phrase permanent death benefit. What is that, a permanent death benefit, and when is it necessary?
Okay, so when we talk about a permanent death benefit, that kind of goes along with like the whole life.
Okay.
Yeah. So having the policy for your whole life, having that benefit, a permanent policy. Okay. So when people talk about that, it's referring to the whole life.
The whole life spectrum. Okay. Mm-hmm. Interesting. Okay. Yeah. And so, I think one of the final questions that I have is that I just found from, my open source research. Do insurance companies, I saw something where insurance companies offer, is this even a thing? Like, they give you a trial period for the actual coverage itself. Is that something that you've ever heard of or seen?
Can you elaborate a little bit more?
I was doing some open source research, and it was something to the effect of if you sign up for a policy, it was insurance companies were saying, hey, you can sign up for this policy, and we'll cover you for a 30-day period or 15-day period. I don't know if this was a new thing, but they would actually give you. You take the thing, you take your test. They say we'll cover you for this amount, and to make sure you're comfortable in this cover policy, we'll give you a couple of weeks. That 2 weeks into this policy, you got a 2-week grace period where you can say, even before your first payment is due, nah, I'm good, I don't want it. But you still have that grace period coverage. Like, to me, I'm just telling you, as somebody who is in the criminal justice field, that sounds like something people are gonna take advantage of, like a mother. You know what? Like, soon as if y'all watching this, don't y'all go out there and try to get $1 million life insurance policies, because y'all gonna get caught and y'all files gonna end up on my desk, and I'm gonna have to put y'all in jail. So don't do that. But is that a thing, or was that just some internet talk, or what?
Honestly, I can't say that that's what I offer to my clients. So if you didn't put no money down, I would say you're not covered, buddy.
That's how I would advise you to answer that question. That's not a tool that I ever offered to my clients.
Yeah, I wouldn't even go for that. I mean, honestly, I'd be a little nervous myself if somebody said, "Oh my goodness, just do this," and I'm like, that's just like, honestly, that's just like getting car insurance.
Right.
And you didn't pay your premium on your car insurance. You have a wreck, then
right.
They're not covering you.
Right.
So I just look at it like that. But hey, I don't know what other companies and what other people are doing, so I'm not gonna say, but that's not what I offer to my clients.
Okay.
But I will tell you, somebody did ask me the question of, I see on TV all the time those policies that say for only $10 a week or $10 a day, you can be covered. And so I always tell people, you really have to look closely at what those things say to you, because really that is actually saying that amount per thousand. On the commercials, they don't say all that. It just sounds good. It sounds really cheap. Like, I can pay $2 a month for my life insurance.
Right.
You get what you pay for. Essentially, you really get what you pay for. So, when things are put out into social media and things are on TV on those commercials, it's super important to make sure that you're asking the right questions, because you don't want to get something for yourself or for your parents or people, your family members, that you're thinking that they're covered, but then if something happens, you still got to set up a GoFundMe.
Right.
You still gotta scrape up money and do all these things. No, you want to actually make sure that you have what you think you have. And so that's why I actually offer my clients or future clients complimentary policy reviews. Because for me, like I said, as a financial coach, my main thing is I got to make sure people know what they have.
Right.
No matter what, if they decide to keep it, if they decide not to keep it.
Right.
At least I'm going to educate you on what you have. Yeah. Because a lot of times people just want to make a sale. And so it's not about the sale. It's about truly educating our community, making sure that people are set so that we don't have to depend on a GoFundMe or a fish fry or a yard sale or something like that to raise money for funeral expenses. Right. And so, so that's just the main thing. Just make sure that you're asking questions. Make sure that you seek out a professional that's licensed in the area so that they can actually make sure that you have what you think you have.
Okay, and I think the last thing I got, and to kind of close out with is, so I think we got kind of a good foundation of the policies, the things that are out there. This is what, and I actually talked about it. I don't know if she's still in here, but shout out to MJ Melissa Jane. Y'all check out her channel too. She has a finance channel, but she had a state attorney on last night, and I just happened to see it, and I was like, damn, I'm gonna have a state attorney on soon. And so, one of the things that I saw, and were being talked about on that live was people just having a general uncomfortableness with talking about anything that's related to their demise. I don't know what it is. I've been telling my parents for years, oh, you should get a will. You should get a will. And I said, when my father finally got his will done, he was in such a bad mood we literally got, and I knew he was in a bad mood. He called me because I just don't think people like discussing their demise. And it got to the point where I was like, look, man, I love you. You don't have to leave me anything. I'm okay. I was like, do I look like somebody who's gonna wait for somebody to pass away to get what I want? So like, I love you, but it was that contentious. So you have people out there who don't have life insurance. I'm talking about fathers, grandparents, and they have family members who are trying to, explain the urgency and the need for them to get it. Like, what would you say? Because like the same way I couldn't convince when I came home after my aneurysm and I was like, hey, honey, I just had 3 surgeries in 90 days in my head. Let's get our finances together. Let's tackle the student loans. I knew we could do it. I did the math. I crunched the numbers. Right. I was like, I definitely can do it. I said, but she wasn't convinced. So I literally paid $200 for FPU solely because I said, let this guy tell her the exact same shit I told her, and maybe some people get the message different. Like me telling my parents, you need this, you need this. So when you got those tough conversations to have in the family, just what would be your thoughts? How would you approach that if you got someone who's resistant or hesitant, like, I got money in the bank? What do you think is the best way to facilitate that? To keep trying to push, to maybe try to have them contact a professional who can put them at ease? What are your thoughts on just getting people to have that conversation so they can either get coverage or get enough coverage?
Right. And honestly, the sad truth is this is a difficult conversation to have, especially when you're talking directly to your family. Right. But we're in 2022, guys, and things are not the way they used to be. Where they shouldn't be the way they used to be, where people were hiding the life insurance policies up under the mattress, and your mom and your grandma didn't want to talk about what they had. Now it's time to actually talk about these things. Millions of dollars are left on the table every single year in life insurance proceeds alone because beneficiaries don't necessarily know that they're the beneficiary of the policy. So then when mama passed away, or grandma or auntie or sister or spouse or whoever, they pass away, they haven't given any written instructions. And so it's time for us to really not be selfish about it. It's not about, oh my goodness, I don't know if they're going to do something to me. No, it's about making sure that you and your family have a strategic game plan in place. For people, we wake up every day, we clock in, we go these jobs, and we're building somebody else's goal and dream every single time we go there. And so when you have life insurance and things like this in place, you're helping to build the financial golden dream that you've always wanted for your family. It's the generational wealth that you're passing down from one generation to the next. But how can you pass that down if you don't educate people with what you have? Right. And so it's all about, the point of, somebody told me, man, I was talking to someone and I said, man, I'm using this. They said, Tasha, if a stranger came up to you and said, hey, I'm going to pay all of your bills for now until whenever, you ain't got to pay another thing, a stranger, are you going to put your full trust in this particular person? Or are you still going to have some sort of side hustle, some sort of money coming in on the side? They told you that you can quit your job, but how are you going to feel about this? 9 times out of 10, you still going to have some money. Should be 10 times out of 10, but let's just say 9 times out of 10, you still gonna have some money on the side, because you never know. They might fall on hard times. Hell, so many people got laid off during the pandemic who had good jobs. Like, you just never know. Well, GoFundMe is the exact same thing. Right. When you pass away, you're dependent on a stranger to literally pay for your expenses or your family expenses. You don't know the situation they might be in. Right. They might be in a messed up financial situation. All they might be able to do is give your family some prayers. Prayers are good, and I believe in prayers, but prayers are not going to pay for your funeral. Right. So you got to make sure that you have those things in place for your family. You got to make sure you educate them. Y'all talk about it. Make it a norm. I was on another call last week, and I said, now that the holidays are coming around, let's have a discussion as a family. Right. Let's for real have a discussion as a family. If you don't have life insurance in place, get it. Right. If you don't want to go with me, call somebody else. It doesn't matter. You just need to get something. And so if your family, if your parents, your whoever, they don't want to talk about it, say, hey, look, the thing is, especially if you're going to be left to handle their expenses, which if you're part of the family, you probably will be, tell them, hey, look, this is about making sure that we don't have to struggle. So if it were me, if it were you, whoever it is, we want to make sure that we have something in place, but we also want to make sure that we have something to pass down to your children, to your children's children. And so that is what I would tell people. And again, I feel like I'm comfortable with having that hard conversation with families and with individuals, but I'm also comfortable with coaching my clients with it. That's the reason why I actually talk to all of the beneficiaries of every single policy I help my clients with, because they might be afraid to have the conversation, but I'm not afraid to have the conversation with the families. And the key question that I always ask the beneficiaries is, are you okay with knowing this is your responsibility if something happens to my client? And they say, okay, yeah, I'm good. Well, then you pick the right person. But if they're too nervous, okay, client, we need to find somebody else to put in their place. And so, yeah, that's what I do. And that's how I help my clients get over the hard conversation.
Right. I this is I guess the way I explain it is I got a younger cousin. He may be 3 years younger than me. He's married. He got married after I did. And the minute his wife was pregnant, I pulled him aside. And this was a couple years ago. Like, I remember driving. I was pissed because I was like, who has a baby shower on opening weekend in the NFL? You lucky I love you. Got me coming out here. And so I'm out there and I pulled him aside and I was like, look, dog, I don't know what you was doing before, but you got a family. I said, you need to make sure that your life insurance is setting in place. That's the one thing that gave me comfort, where I was like, my life insurance policy good. I just sat up in ICU. I was just I was sitting there just chilling, and I was completely fine because I knew, whatever, if something happened, everybody's going to be taken care of, and nobody's. The only thing y'all will have to do is grieve me. Don't do anything else. Don't worry about nothing. Just grieve me, and I want a celebration. I don't want y'all crying for more than 2 hours, or I'm gonna be pissed. I'm gonna come back and haunt y'all. But what I told him was, and I think these words ring true, is the difference between loving your family members and actually really giving a fuck about them. Mm-hmm. And I hate to say this and say it that way, but you can love your family. You can love people with all your heart. But when you start talking about planning and life insurance and what's going to happen, that's when you show that you really do give a damn about what happens to them. It's not about the things you can buy them while you're here. It's about the peace of mind and comfort you can give them when you're gone, and when they have to just grieve you, they shouldn't stress about anything else. So I think that's, kind of I was like, dog, you're going to love your family, but if you really give a fuck about your family, you need to have this in place. I hate to say it as raw as that, but that's just kind of what it is.
Yes, because life insurance is love insurance.
Exactly.
And people are depending on your income to any capacity. Or even if you're somebody who you're single, you have no children, you're like, oh my goodness, I don't even know if I need life insurance. Do you plan on having a family in the future?
Right.
Do you plan on having kids in the future? Getting married, whatever the case is. If the answer to that question is yes, then you need to prepare now while you're young and healthy and single.
Right.
You can always increase the coverage when you get more liabilities, which would be your spouse, your kids, and things like that. And so I always tell people that part. And again, for people, especially if you're married or if you're a single parent, you need to have life insurance on yourself. You need to have these things in place, because it is such a shame when you think about what happens to families when it comes to money after a person is gone.
Right.
And most of the time it's because they did not have life insurance in place, or they didn't have the things written out in a will or anything like that. So people are fighting over the things, and you don't want the money issue to be an issue for your family if something happens to you.
Right.
You don't want people to have to figure out what to do with your things if something happens to you. That's why life insurance and estate planning is extremely important, because at the end of the day, we want to make sure that when you're dead and gone, when you can't speak up for what you really wanted, everybody still knows. There is no confusion. the assignment was understood because you left the things there for everybody to be able to understand. And I see somebody put a question. Do you want me to answer that question?
Go ahead and knock it out, sis.
Okay. So Desiree said, "Are term policies expensive for older adults 60 plus like they say they are?" Life insurance in general is based on age and health. So I will say that whether if it's term or whole life, older people will pay more money. They will pay more money. However, term policies will actually be less expensive for an older person based on the fact that term is just, I mean, we all know the term is cheaper than whole life insurance. Right. So that's to answer your question in short, Desiree.
Right. And I will tell you, you brought this up because you talked about how important it was to, get it while you're single. Then when you get married, you can adjust it. Please, and family law is not my area of expertise because I would rather deal with criminals and crooked bank CEOs than family law because that shit is crazy. But I can count so many times where I've seen an individual is married and have a life insurance policy and spouse A is written as the beneficiary. They get separated, they divorce. That policy is still floating out there. Now, a lot of times, if there's a separation agreement, that policy is oftentimes addressed in the separation agreement. But if there's no separation agreement, we just say we're going to go. It can create a big ass mess if your ex-wife is your beneficiary on your policy. You fool around and remarry some new husband or some new wife, and your ass drop dead. You want to talk about people cursing you from the grave? Do not do that. Make sure if you have any significant changes, make sure you always come back and reevaluate your life insurance policy, your beneficiaries, all of those things, because I've seen some fights break out at barbecues, and I heard some wild ass stories that could have been avoided if it was some proper planning in place.
Yes, proper planning prevents all kinds of crazy stuff. Yes, you should be looking at, and this is what I tell my clients all the time. Remember, you can change your beneficiaries. And so whenever you have a life change, so for example, if you have young children, because young children under the age of 18 cannot actually be they could be a beneficiary, but I don't advise that. I would say if they're under the age of 18, you need to have someone in place that's actually 18 or older, because if they're under 18, then they cannot get the funds. Right. So you will have life insurance there, but it has to sit until the child actually become of age to be able to receive it. So if you want your children to be your beneficiary and you know that they're under 18, when they turn 18, then you need to make sure then they actually are moved to your beneficiaries.
Right.
If you get divorced, or let's say you get divorced and one spouse has the children and then you have a new spouse that don't have children, in a lot of cases, you can separate the percentage of the beneficiaries. Right. If you still just wanted to keep the other spouse because you were with them for X amount of years and you want to put the other spouse,
right.
Just adjust it. Make it 50-50 if you really wanted to, or 25-75, whatever you want to do. But you got to make sure that you put those things in order, because the worst thing that can happen is a person that might think that they're on there and they're not. That even goes for the previous spouse. They might think that they're on there and they're not. So guys, women, men, let's have these conversations. Let's just have these open conversations with each other so there are no surprises when it comes down to it, because the last thing you want is for you to be at your funeral. Obviously, you're not there really, but people to be fighting over who's supposed to get what or who's responsible for doing whatever. And then also when it comes to beneficiaries, make sure that it's somebody that you know, love, and trust. Know, love, and trust. Because at the end of the day, if something were to happen to you, this person or these people are the people that's going to plan your actual your burial, make sure your debts are paid off, replacing the income, the mortgage, the children's education, all these things. So make sure you have those things in writing in a will. Make sure that you've talked to your beneficiaries to let them know their responsibilities. Because again, if you don't have the things actually written, they can take the money and run. And so
Definitely.
you don't want that to happen to you or your family.
Yeah, I already told my wife. I say, look here, if something happened to me, I'm not opposed to you getting remarried and finding love. I want you to be happy. You just better not find it too damn soon. I I said I need a. I don't ask for a lot. I want a good. I don't ask for a lot. Just give me a nice little buffer. Then y'all can go off into the sunset. But if you do it too soon, I'm gonna come back and haunt your ass. But I said I'm not a hater, but just don't have new fun with your new boo too soon with my insurance money. Just give me a nice mourning period, then I'll leave you the hell alone in the afterlife. But hey, go ahead.
Give me a chance for some flowers to grow by the grave or something.
Yeah. Give me one spring and one summer. That's it. After that, y'all go to Turks and Caicos and be happy on my dime. I wish y'all the best. You know what I mean? Keep my picture up. Keep my picture up over the bed. I'm just staring at him. Yeah, but yo, hey, I want to give you a big thanks. I appreciate you coming on, answering these questions. This was something that I decided. I was like, man, I'm gonna do it new, and I'm gonna try to have somebody on every other week and touch something that we really need an impact on. And life insurance was one of the first questions I got bombarded with in the live. So I'm really grateful that you reached out, and I appreciate it. And I'm very thankful for you for doing it.
Yes, honestly, Marcus, I'm just blessed for the opportunity to be able to talk to people about the things that I'm passionate about and making sure that people have what they think they have, or so that people can have the right things.
Right.
Those are the things that I'm passionate about. Like I started off by saying, we weren't taught these things in schools, from elementary, middle to high school to college. If you didn't major in finance, you weren't taught these things.
Right.
And so now is the time for us to take this information that we're gaining and pass it down. Each one teach one, so that we can reach one. For
Right.
real,
Right.
for real.
Definitely.
And so, like, making sure that our kids know the importance of these things. It's time out for acting like we don't know, because it's so many resources and things out there. We can pick up a book and read. We can do all these things, but when you have people that's licensed, when you have people that's licensed, that's knowledgeable about these areas, take advantage of these things. And so, yeah, I'm just so glad that you had me on your call today, or your show today. I'm just super excited, and I hope that people were able to learn from it, because we talked about a lot of good things today. So, yeah, I just hope people were able to get some gems, and I hope that after today, like you mentioned, you start off by saying it's Life Insurance Awareness Month,
right,
y'all.
Right.
So because it's Life Insurance Awareness Month, get some life insurance outside of your job. Get it. Don't delay it. Don't delay it. Why delay something today when we know that tomorrow is not guaranteed?
Yeah.
Again, the great thing about me is I'm licensed in 14 states, and so I'm able to help people all over. If it's a state that you're in that I'm not licensed in, I don't mind getting a license, because hey, that's another family that I'm able to help.
Right.
And
right.
so I'm, like I said, I'm truly passionate about this. And I'm just so thankful for you, even with your field of law, thinking, hey, let me get somebody in to talk about these things.
Right.
It really means a lot.
And I'm stubborn too. I like to think that I know a little bit about everything, but I was like, nah, I ain't gonna lie to these people. You know what I mean? I only like to talk about the things that I know, but I'm definitely grateful. Hey, her link tree is linked in the description box. After this video post, I'm actually going to pin that as well in the first comment. So you can click on it. You can click on all of her social media. You can click the book an appointment so you can get that information and knowledge. Before we dive out, sis, and we definitely going to have you back with your financial cap on too. But before we get out, let everybody know where they can find you at on all your social platforms before we chunk up the deuce for the last time.
Okay, thank you. Again, my name is Tasha Triplet. You can find me on IG at Tasha Triplet. It's 1P, 2 T's. So Tasha Triplet _ is my Instagram. On Facebook, it's just Natasha Triplet. And just like Marcus said, My link tree will have a scheduling link, and then I will also give him my Calendly link for you to be able to click on if you want to book a one-on-one consultation. The consultation takes about 15-20 minutes for me to actually see what you need. The great thing is, if you're good with what you have, once I review it, I'm gonna tell you, keep what you got. If I can help you enhance where you are, I'm definitely gonna help you in that particular area. So I'm just blessed to be able to be on this platform, to be able to talk to people about these things, because we need more people. We need more people talking about these things. You know, it's time out for being in the dark. And so I'm just super passionate about it. And again, I thank you, Marcus, for putting me on your screen today, because we need it. We need it for sure.
Yeah. Hey, we appreciate y'all tuning in. Y'all make sure y'all stay tuned. I got a crazy story that a video I'm gonna put up too about Kanye West, because that brother's crazy. So y'all make sure y'all check that out. It's a Red Saturday video, but it's gonna be interesting. Y'all take care. Be blessed. Love y'all. Peace.
Peace.